be called? They're penny stocks. Most people look at you like, oh, you're on a microcap, you're a penny stock. It's pejorative. The financial industry looks down on penny stocks, and for some respects, they have a right to. What do we know about penny stocks? Well, they're risky. Most of them don't work. They're highly volatile. But if you're honest with yourself, you're buying a 10-cent penny stock, not because you think you own equity. Equity is a fallacy. Again, you legally own equity in a penny stock, but you invest in a 10-cent penny stock because you think it's going to go to $1. You don't invest because you have equity. If that company goes under, you're so far down in line, you're not going to get money back. But that's the risk of being at that level. These companies are at a lower level. They're highly risky, highly volatile. They're highly speculative and manipulative. And what I mean by manipulative, I've got all my notes here. These are all things that I've learned. I've had OTC companies. A penny stock has different levels. Down at the very bottom, they're called pink sheets. So some of you know this, you're like, this is old hat. Other of you may not understand. Pink sheets, very risky. They're what are called unaudited. Unaudited means there is no audit. There is no financial structure. There may not even be transparency into what the heck the company's doing. Pink sheets are really risky. And some companies will start purposely in the pink to try and build before they have to go level up to audits. And audits are expensive. If you get audited, it means you have more structure. You've got more credibility. And the stocks at this level are manipulated with press releases. What do I mean by that? Look at Elon Musk. Again, I love Elon. Elon's pushing out a press release, a meme, the new version of press releases, meme on Dogecoin. Goes up and down. eForce, I love the eForce guys. Ken has done a great job. They're launched out of Malta, but they attached Steve Wozniak, big name, did the WozX coin, WOZX. When you research it, almost all of the press, all of the PR has nothing to do about eForce. It has to do about Steve Wozniak being attached to a company for one of the first times in his history. The WozX, 10 cents to $3. It's easier for a penny stock, a microcap, to go from 10 cents to $1 or from $1 to $3 than it is for an Amazon to go from 3,000 to 9,000, or easier than a Bitcoin to go from 50,000 to 150 or 500. A 10-cent penny stock can move to $1. That's what cryptocurrencies are. They're not trying to be currencies. They're not payment. They're glorified penny stocks. Retrospective evolution. If we look backwards, what are the advantages of a microcap? Lower cost to market, lower volatility, initially, and then you can build market makers. You can move the markets. You can move stock. Liquidity in a public vehicle gives you the ability to raise more money, and ultimately you might get acquired. You move up, you uplist to Nasdaq. That's what cryptocurrencies are. That's why I joke, email versus the internet. If you're trying to figure out Bitcoin, that's figuring out email. The bigger market for blockchain is digital tokens, the quote tokenization. Again, I don't like that word because so many people try to tokenize everything. But when you look at a company early on, the ability to raise money in the public markets, it gets more difficult as you move upstream. It takes longer. It's more expensive. At the very low level, you could actually do what's called a DPO, a direct public offering. If you had a market of people, if you had a customer base, if you had a way to go out and market your stock at an OTC microcap level, it's much less expensive, much less overhead, and the ability to go from 10 cents to 50 or $1 is substantial, but it's risky. It's extremely risky, but some of them work. The execution's there. That's what I mean. Email, internet, Bitcoin, digital tokens. The digitization of companies going direct to raise money is going to revolutionize the entire finance industry. I have people come to me all the time. They're like, oh, we've got this great offer in Steven, you should invest. It's equity. You're in at the angel round, and our next valuation is going to be they're coming in at 5 million. The next round's going to be 10 or 12. That's a hit, a 1 or a 2. Not interested. I'm locked into that equity for 3, 5, 10, 17 years like a Palantir, 11 like an Uber. If that company came to me and said, hey, here's some equity, and here's a separate digital token, like a liquidity token, that if we're successful long-term, you still get your equity, but short-term, we've created a digital token to not only potentially give you, the investor, liquidity much faster, but empower the company to raise money using a digital token in a public market. And that money is raised without diluting the parent company. Fascinating world. The way companies are going to raise money using digital tokens. Blockchain, again, the blockchain runs the ability to do this. Retrospective evolution. You need to look backwards to say, what's worked in the environment of investing? What's worked in corporate structure? What's worked in what's called pipes? What's a pipe? A pipe is a private investment in a public equity. You get investors in that says, hey, invest here at a discount to the stock price, but when we go out, you'll be able to get your stock at a certain period in time. In the US, there are restrictions for 6 or 12 months, but you get your stock, which potentially gives you liquidity faster than equity. You need to understand digital tokens, the digitization of the stock market. That's the difference between email and the internet. Bitcoin is email. Digital tokens of how companies raise money, that's the global stock market. Multiple trillions of dollars are going to be raised using new technology. And if you're not following that and you don't understand it, you're going to miss it.